Hi, thanks so much for tuning in to BQ Prime. Now, a lot has been said in the recent past about the Adani Group, and it all stems from the allegations that were made by Hindenburg Research ahead of Adani Enterprises FPO. And the impact of that is visible even today, with quite a few of the stocks of the group under pressure. But I don't want to talk about the value of those Adani stocks today. I want to focus on the primary pillar on which the group is built, which is the infrastructure and allied activities of the group, and what the implications, if any, are of recent events on these activities, on these businesses, because they are clearly capital intensive, and some have questioned whether availability of capital or access to capital is going to hamper the growth of these businesses going forward. We also need to understand how these businesses operate. To give you a perspective on all of that, I have with me Vinayak Chatterjee, who is currently the chairman of CII's National Task Force on Infrastructure Projects. Thank you, Mr. Chatterjee, for taking the time.
Thank you, and good morning, Alex.
I want to start, before we get into the nitty-gritties, Mr. Chatterjee, I think for a lot of our viewers who are not familiar with how infrastructure projects and infrastructure companies operate, and also the scale of operations, could you give us a perspective as someone that studies the space very, very closely? What's the scale of infrastructure within the Adani Group?
Well, I am going to do that. Alex, the current situation is complex and is amenable to all kinds of interpretation, perspectives, and different people looking at it from different lenses, depending on where you're coming from. So what I've tried to do for your viewers is that for this morning's discussion, I've tried to collect my thoughts around 4 buckets.
Okay.
Bucket 1 is, as you rightly asked, a perspective on the infra space and the Adani Group's ongoing projects and investments.
Sure.
Bucket 2 is a take on the Hindenburg allegations, a short discussion on that. Bucket 3, as you rightly said, is what now going forward. And bucket 4 is I want to spend some time on the Indian context of big ticket private capital and private entrepreneurship, because I think that has a strong bearing on the discussions. Okay. So may I request you to allow me to proceed in presenting my thoughts in these 4 buckets?
Sure. So let's start with the first. Let's start with the first bucket.
Yeah, and my request would be, I will pause after each bucket to take your questions and possibly have a discussion. So let me start with bucket number 1. What is bucket number 1? Bucket number 1 seeks to answer your question on the size and scale of Adani's involvement and investment in Indian infrastructure projects. Broadly, they are grouped in 5 investment groups. The first is energy and utility. The second is transport and logistics. The third is intermediates manufacturing. Fourth is natural resources. And the fifth is not infra, but it is FMCG with one of their companies in the foods business. So here are the 5 buckets or the 5 groupings. Let's look at energy and utility, which is the group number 1 on infra. Adani Group is one of the largest players in generation, electricity generation, transmission, and distribution across the full value chain. It is present in both conventional as well as renewable sectors, and it also has a vibrant investment program in the manufacture of solar, wind, and green hydrogen components. So, as you can see, it has a significant presence in the energy and utility space. The second group is transport and logistics. It is common knowledge that in the private sector, Adani Group is the largest owner-operator of ports, airports. Increasingly, it is building a sizable portfolio in roads also, both as an investor as well as an EPC contractor. And very few are aware of the fact that it is a significant player in warehousing. About 30% of India's grain storage is stored in Adani warehouses, whether in Punjab or at the ports. So in transport and logistics, ports, airports, roads and warehouses. That's a very, very interesting and dominant cluster. The third group is intermediates manufacturing. Intermediates largely consist of them being today the second largest player in the cement business with the acquisition of ACC and Ambuja. It also has projects in the intermediate space, which is green PVC, etc., etc. So it's beginning after cement. It also has a play in the intermediates business. Then it has a group called natural resources. It is very well known that the Gautam Adani's entrepreneurial journey started in many sectors and many senses in the infra play with coal mining and coal trading, and therefore now they have coal mines in Australia and Indonesia. There is a vibrant coal trading business. So that's the natural resources. And increasingly with cement, you have to be in natural resources with stuff like mining limestone quarries and all that, all form part of what one would call the natural resources mining space. Finally, it's the non-infra space, which has been a very interesting play on India's FMCG market, which is the operation of this firm called Adani Wilmar, which manufactures and supplies this fairly famous brand of Fortune oils, but it has gone far beyond oils to supply a lot of food staples into Indian household. And surprise of surprise, in the last 10 years or recently, its turnover has overtaken that of Unilever India, which says quite a lot for its. Now, what is therefore having laid out this play of infrastructure investments and projects with what is the common link? The common link is very simple. In practically every segment, it is a market leader. It's interesting. It's not easy for a group to be a market leader in this wide span: energy and utility, transport, logistics, intermediate, natural resources, and FMCG. It is a market leader. All these businesses address very fast growing domestic demand. If India is the fastest growing economy in the world, then clearly from energy to Fortune oil, it has an insatiable appetite to consume such outputs. It faces fast growing domestic demand. It has all these entities, surprisingly, because people always talk, I've seen newspaper reports saying the entire group is family dominated. But interestingly, all these businesses are headed by fairly reputed professional managers. It has all these businesses have strong cash flows. In the infra side of it, they have long concession periods, fully operating assets, and good operating results and cash flow. In fact, the banks, NBFCs and others have all commented, from SBI to LIC to others, that really they don't have any concern on their lending to these operating projects. So I'm going to stop now after this discourse on bucket one, which seeks to answer your question on the breadth and depth of its operations and what is a common thread linking all of that. So the bottom line is very clear. The operating businesses are domestic demand facing, protected from the vagaries of international trade, have very strong professional managements running them on a day-to-day basis, and have strong operating results and cash flows. And the banks and others have publicly stated that there doesn't seem to be any concern on these operating companies. But back to you, Alex.
Okay, so you've laid out the foundation, I think, for this conversation. But before we get into some of the allegations that Hindenburg has made, I do want to ask you to kind of explain how these infrastructure companies that you've just pointed out, how they work in terms of use of capital, the capital that comes in. They have been called, of course, capital intensive, but by and large, one would assume that building out roads and infrastructure projects, setting up warehouse capacity, all of that requires a significant amount of capital. So how do these work? What's the structure of these?
Look, in the infra business, there are basically two types of capital deployment. One is where you own the project. For example, in Adani's case in Mundra, the asset is on the balance sheet of the Adani Group. It is a company-owned asset. Whereas in the case of certain other port terminals or in the case of airports, these are in PPP frameworks where you don't own the asset, but you have a right or a concession, as it is called in the infra jargon, you have the right to operate these assets from 30 to 60 years. So obviously in those cases, again, there is a difference. In some cases, you have to put in the capex and then run it for 30 years, which is called a greenfield PPA, the PPP, or the assets are already in place and then the asset is handed over to you for O&M, operations and maintenance. In the case of the airports, for example, the assets are already in place, whether it's Guwahati or Lucknow or Bombay. And your job is not just to run it, but take a look at incremental capex so that if there is expansion, etc. So those are the two kinds of plays. Infrastructure, it is interesting, is capex heavy. Also very interesting is that they have very long lives. In the concession periods range from 15 to 60 years. And for the ones that you own on your balance sheet, of course, the life can go up as long as you want to. It's also interesting that after the initial first 7-10 years, when the bulk of the loans have been repaid, the assets, you have a lesser and lesser burden of servicing the return on loans. The loans get paid back, and then the margins start improving significantly. So that's the broad play, but is
it normal?
Industry, it is capex heavy.
Is it normal, Mr. Chatterjee, for these projects and for these companies to therefore have a sizable amount of debt on their books? Because, for example, a road project, the construction of it would require, yes, some equity, but a primary amount would be through debt, correct?
That's the norm in infrastructure projects all over the world. If you see some of the biggest infrastructure projects the world over, take the case of the English Channel, where the debt has been reset, I think, 3 times, etc., etc. It is a norm in the infrastructure business that the debt equity can go up and is allowed to go up often as high as 1:4. So broadly, you need to put in 20 of equity to raise 80 of debt. That is the norm. So I mean, because why is such a higher debt equity allowed in these businesses in infra? Because they are backed with solid assets. And in many cases, the assets are not depreciating, but they're appreciating because of locational and monopoly advantages. So a 20-80 gearing, a 1:4 gearing is appropriate in the infrastructure business, and any gearing between 1.2 to 1.4 is considered safe. So to answer your question, such a level of debt is required the moment you decide to be in the infrastructure space, and that is well recognized by lenders of all shapes and categories.
Okay, which brings me, and I'm glad you spoke about the leverage ratio, because it brings me to several allegations that have been made by Hindenburg Research. Among them is the kind of leverage that the group has. Among them is a question on the valuations of these companies, but I guess we can stay away from valuation because there has been a lot that has been said. But what are your responses to the questions that have been raised in terms of regulatory lapses in infrastructure businesses that are operated by Adani Group?
Thank you. I think you've now opened the box on my responses on the Hindenburg allegations. There has been so much flying around from their original, 103-page report to the Adani's 430, and every market commentator, commenting on what he or she feels is appropriate or inappropriate. So what I tried to do across the last few weeks, since it broke, the last 10 days, is I've tried to collect my thoughts on what are the fundamental classes of allegations that Hindenburg have made. And in my view, all the allegations can fall into 6 classes. 1, use of shell companies. Now, to my mind, use of shell companies is when you're putting in so much equity and when you're putting in so much debt, it is natural for you to be raising funds from all over the world. And many of these funds come in from, and it is called astute tax planning, not tax evasion, to bring in these funds from tax havens or countries which are not tax havens but tax friendly for international financing, like Singapore or Mauritius and many other places. It is a natural practice in the world over to route such monies through such financial locations or geographies which provide very good tax planning, not just for the person receiving the money, but for the person investing. It increases his returns. So Adani Group, like many other industrial groups in this country, has shell companies, but that is allegation number 1 of Hindenburg. Allegation number 2 is dubious intra-party and related party transactions. here again is I have no great expertise on commenting whether this is right or wrong, but funds do tend to move from shell companies to operating entities. Operating entities do at times lend either in terms of bridge finance or seed capital to other group entities. Now, it is really not for me to judge, but that is really what the second group of allegations is. The third is unreputed auditors, which in some senses, to my mind, holds water, because a group of this size and complexity and breadth and depth would be actually appropriate from a market point of view for the Adani group to have auditors of international repute, and I think it's good for Adani and it's good for the India story. So I think that's a very valid point. Point 4 is the violation of listing requirements. This is a very technical point, and I am not competent to comment on it. The fifth group of allegations is manipulation of stock prices. Now, to what extent this allegation holds, does not hold, I am no judge of it. As the finance minister has said, let the regulators do their job and find out. So we shall wait for that outcome. The last is that an association of guilt by some members having faced misconduct in charges relating to earlier transaction in the years gone by. I personally think that these need not have been brought into the Hindenburg report, because, I mean, it has no bearing on current operations, I mean, to cast such allegations. But here are the 6 classes of allegations, and I have given you my response on all these 6, but over to your question.
About the response by the Adani Group about acquisition of infrastructure projects or mines or anything else that requires bidding. Their point is that there is a public bidding system. So is it possible to circumvent that from a regulatory standpoint here in India, Mr. Chatterjee?
It is interesting that people tend to forget that Adani keeps losing projects. It has not won every project, and it has participated in bidding, because by law, infrastructure PPP projects and concessions can't be handed over in this country. It's not possible. So in many cases, the most recent example is last week. Last week, the government put out a tender from the government-owned Kandla port for a massive container terminal in a place called Tuna Port, which lies midway between Adani's Mundra Port and Kandla Port. So Tuna Port a tender was out for a long-term concession period to build a world-class, large-capacity container terminal. Now, who would not have been interested in this but Adani, considering that it already has a coal berth and in Tuna Port, one section of it, and just 50 kilometers down, it's got one of the largest container terminals at Mundra. But guess who won the project? Adani was completely outbid by DP World. So I'm giving you this freshest example to say that there is case after case where the Adanis have lost out to competition, and that needs to be chronicled also, along with the story that things are handed out. Whether it is losing IPL franchisees to bids on certain other ports or energy, it wins, it loses. And the few cases where it might have been a single bidder is because a transparent bid was put out. But if nobody else bids, then the government itself has a scheme where everything else being equal, the single bid is considered a valid bid under public law. So this is an allegation that needs to be substantiated with fact.
Okay, fair point. Now, beyond these allegations, and I'm guessing that the regulators themselves, the finance minister herself has said that the regulators will look into these allegations and will follow through on their own research and analysis. But beyond the allegations, Mr. Chatterjee, the question is about perception, and you've established that there is a requirement for significant amount of capital in the projects that are run by the Adani Group. And I think efforts have been made by the group to kind of mollify or calm investor nerves, not just here in India, but globally, and talk about the merits of their businesses. In fact, very recently, you had the paying back of a significant amount of debt to release pledge on shares. And that is being seen also as a way to kind of give confidence to investors to say that we have the ability to repay. Now, the question that arises then is there going to be an issue in terms of availability of capital or access to capital in projects that they run or will take up in the near future? And will they therefore have to slow down the pace of acquisition and growth that they've had over the past decade?
Answer is yes. A straight answer to your question is yes. But it's a short-term yes, because what I've understood from the various pronouncements that have come from the Adani Group is that there is going to be, in the short term, a slowdown in the rate of spend on the fresh capex commitments. That is but only natural in the current context. You couldn't expect it to be otherwise. However, my belief is that, like you mentioned about them re-engaging with capital markets, like the recent, shall we say, retirement of bonds before the due date, and various other re-engagements with the capital market, I think the process of the rejigging of its capital raising plans and consequent capex deployment plans will happen in the course of the next 12 months. So I expect a certain slowdown, a significant slowdown in the spend on capex in the next 12 months. But after these 12 months are over and that re-engagement with capital markets has played itself out positively, I expect all capex to become back under normal course of events. But your question is a little larger, and I'm going to address that beyond capex to say, what now going forward? And there are a few other points. The two other points I have. I think from what many analysts from all over the world are saying, it would be prudent for the group to allow stock prices to settle down at what would be called conventionally appropriate levels. There is a certain amount of truth in the allegations that many of the stocks, in terms of the price multiples, etc., were over the top. You can't deny that. So it would be in the group's interest to allow the stocks to settle down to, as I said, what would be called conventionally appropriate levels. That would inspire a lot of confidence in the market. And I think going forward, the sheer breadth and scale of its involvement in the domestic economy is such that it would be a very good practice for the group to have many of their very good professional managers who've got their nose to the grind wheel now, running their operations, to give them far more visibility and market facing, so that the markets understand that while there's certainly an entrepreneurial family, but backing them are a group of very strong and reputed professionals. And I think these people now need to be given a certain market facing and public facing role to, in a sense, come out of their operational woodwork, if I may say, crawl out of their operational woodwork and get more market facing and defend the businesses they run, defend the valuations, defend their profits, etc. That would be an advice that I would certainly leave with the group maintenance. So these are really some of the thoughts I have. But so over to you, Alex, because I really have my last bucket, which is the softer side of the India story and entrepreneurship. But over to you in case you had.
No, I'm curious about that, because you have had instances, Mr. Chatterjee, and I'm talking about the last bucket that you mentioned, because really the response from the Adani Group was to say that this is a challenge not just of the group, but also of India. And some have maybe questioned that kind of an assertion. But in a sense, the question that a lot of people are asking is it possible for a private entrepreneur to grow to this scale without having to face questions about how they reached there? And what does this have in store for an increasingly connected India to the rest of the world to say that such incidents will not happen in the future?
Look, this is the soft side of the entire saga, which requires some explanation. I think in world over, for fast-growing economies, particularly developing economies or economies which are very large today, which were developing earlier, the relationship between Rockefeller in the US in the days when steel and railroads and all were being built, the role of the large Japanese corporations with the state, the role of South Korean big businesses with the state, the role of companies in Singapore with the state. You cannot deny that when the state or a developing economy asks for big ticket investments from private capital and private entrepreneurs, that there will be no linkage between political economy and investment. It is foolhardy to think so. Such linkages should be good for the country and good for the people, right? So, in my view, the size and scale of Adani's investments in India are very clearly linked to the growth story. And what is the growth story? It is two prime ministers from different political backgrounds. Prime Minister Manmohan Singh from the ramparts of the Red Fort, I remember at an Independence Day speech, urged Indian entrepreneurs to invest in infra and unleash their animal spirits. Current Prime Minister and the Finance Minister and everybody else has been exhorting the private sector to put in capex, not just in manufacturing, but in the larger story of India's infrastructure. So, therefore, you've got this mixed bag. You've got this constant call for big ticket private entrepreneurship, animal spirits to be unleashed, big ticket investments in Indian infra. You've got this constant call of the political establishment to the rest of the world saying, come and invest in India's infrastructure. Now, when you say all of this, you obviously need very large homegrown entrepreneurs who have the ability to receive many of the foreign capital that can come in. The foreign capital cannot come in a vacuum. And the foreign companies who are investing do not have the ground feeling of how to create and develop projects in India, which everybody knows creating infrastructure in India is probably the most difficult game. And here you've got this entrepreneur who has within him, Gautam Adani, a very, very interesting bundle of skills, from grit, determination, vision, networking, political positivism, to being able to garner capital from the rest of the world and put up world-class, world-scale infra projects. Now, this is the scale of the entrepreneurial ability, and I'm just going to say that it is linked to the India story. And the funny portion is that India probably requires 8 or 10 more Adani groups, and we don't have them. So which is the entrepreneurial, what is the entrepreneurial energy that is going to pull all these very difficult skills of getting private capital, amassing and harnessing private capital, acquiring land, getting all the permissions, putting in the management, managing the regulatory framework, and building world-class infrastructure with private capital? It is Gautam Adani who stands out today as somebody who has demonstrated the art of the possible. So we require 8-10 more Adani groups, and therefore I'm saying that when all the pricing calculations are done, there is one element called entrepreneurial ability and chutzpah, which cannot be priced. It is priceless. Over to you, Alex.
Well, I think that more or less concludes our conversation on that note, Mr. Chatterjee, because we've covered several aspects of this, and while we may not have been able to have all the questions answered by you, I think you have answered some questions in terms of the operation of the infrastructure businesses of the Adani Group. Pleasure speaking with you.
Thank you, Alex, and I appreciate your questions and the space you have allowed me to carry on the discussions. Thank you very much.